At the recent G7 summit in Canada, leaders agreed on the G7 Critical Mineral Action Plan, recognizing that rare earth minerals are vital to national security. Ensuring a reliable supply chain for these resources is now seen as essential. The plan emphasized the need for collective investment in responsible critical mineral projects, both within the G7 nations and globally. This move signals the Western Alliance's intention to reduce reliance on China by strengthening their own rare earth supply chain. The urgency has grown following China's export restriction on rare earth minerals in April 2025 amid the escalating trade war between US and China. And both countries are restricting key exports. For example, US is limiting chip design software, chip making machine, and advanced semiconductors to China, while China is curbing rare earth mineral export to US. As a result, China will work to develop its own high-end chip, while US and its allies will be mining and processing rare earth minerals domestically. These strategic efforts will likely lead to increased government spending in these sectors, creating strong growth and investment opportunities for investors. Currently, most rare earth mineral ETFs on the market includes Chinese companies. For example, the largest and most popular pure play ETF in the sector is VanEck Rare Earth and Strategic Metal ETF with the ticker symbol REMX, with around $280 million in asset under management. However, I think to take advantage of the upcoming opportunities, it may be wise to avoid Chinese rare earth mineral companies because the Western Alliance is focusing on boosting its self-reliance, which will likely lead to increased production in non-Chinese markets and territories and create greater competition for Chinese firms. Therefore, the goal should be gaining exposure to rare earth investments outside of China. So even though I'm a big fan of ETFs, since I prefer to buy and hold for a very long time without selling, because of ETF's auto rebalancing mechanism, it helps me to do it that way. But unfortunately, all the available rare earth ETFs have Chinese company in them. So we're going to have to change our strategy by focusing on individual stocks. But I think the easiest way is to find the best rare earth mineral stock outside of China. Just find the best one and just buy and forget. Okay, but to find that company, we need to first look at what country is the best country outside of China in rare earth mineral production. So according to this data from 2022, China accounts for 70% of the total export of rare earth minerals. Number two have US, account for 14% of total output. Number three is Australia, accounts for 6% of the total output. Although Canada holds some of the largest known rare earth mineral reserves in the world, I believe it's too risky to be investing in Canadian rare earth mineral companies at this stage, because if you look at this ranking, Canada is not on top 5. And because Canada is not producing or mining at scale. In this stage, everything is preliminary, okay? So, which creates a lot of uncertainty about who will ultimately be working on these projects. It could be American companies coming to Canada to work on those mines. Who knows? It could be European companies. So, given the uncertainty, I think the safest strategy for now is to invest in the largest rare earth producer today that's actively operating within the Western Alliance. That company is called MP Materials with the ticker symbol MP. It's an American materials company listed on the New York Stock Exchange. The stock is up 130% year to date with a market cap of $6 billion. So in 2024, MP Materials owned and operated the largest mine in the world outside of China. It's the Mountain Pass open pit mine in California, which account for 99% of all U.S. rare earth mineral productions, making it virtually the only domestic producer in America. Right? Okay, it's MP Materials. So when we said America produces 14% of the total global production, it's this company alone. There's no competition. Okay? So currently, MP Materials can mine and process most of the light rare earth minerals. However, it can only mine certain heavy rare earth minerals and has no capability to process them. So China pretty much have the monopoly in the heavy rare earth mineral processing. And this gap is the key vulnerability within the Western alliance, which China is exploiting by imposing export controls on heavy rare earth minerals. But in 2022, MP Materials actually secured a $35 million in funding from U.S. Department of Defense to build processing facilities for heavy rare earth minerals, and the project is expected to complete either this year or next year. Once the project gets into fully operational, MP Materials will become the first and only company outside of China capable of mining and processing heavy rare earth minerals at scale. So MP Materials is the clear leader in both light and heavy rare earth minerals, in both mining and processing within the Western Alliance. Of course, the strong competition coming from China in this space is very fierce. If MP Materials had to compete alone as a company, there's no way this company will survive, especially when it's operating in the Western framework where environmental stuff is very important, right? And on the other hand, it's not so important for China, and also they have very advanced technology in processing, and they have cheap labor cost. However, if in the future the company gets substantial government funding and support, I think this company will have a bright future, right? With a consistent backing through the funded project, I think this company is well positioned, right? Because right now it's the leader in this space outside of China. But I think, of course, this is a mining / material company. These companies are highly volatile because they are linked to commodity price, and commodity price fluctuates a lot. So that's the risk you have to recognize if you do want to invest in rare earth mineral. But at this moment, I think this is the best investment to make if you're a long-term investor. Thank you very much.